Is there a shift in the Austin real estate market? Are homes still selling for a premium over list price? Are buyers drying up and sellers pouring out? What's going on with those interest rates? All this and more on my show today. Let's kick it.
Well, I'm going down to Austin, Texas. I'm going down to save my soul.
What's up, guys? This is Randy White, and I'm your local Austin realtor. So we're gonna get right to it and talk about the hot news of the town. Is the Austin real estate market slowing down? And I'm here to tell you today that it is. We're cooling off, people. Now don't freak out because it's not a full-on ice bath, okay? It's more like cooling off with a wet towel after a really hot day in the sun. Let's throw up some numbers here so that you can see the data. Months of inventory across the board is doing awesome compared to 2021. Every single county experienced over 50% increase of months of inventory. Now that may all sound like roses and sunshine when I put it that way, so let me go ahead and bring you on back down to earth and have you realize that I'm just talking about a bump of supply from 1/3 of a month to 3/4 of a month. Remember, a seller's market is 0 to 6 months of inventory. A balanced market is 6 to 7 months of inventory, and a buyer's market is 7+ months of inventory. So I just can't stress enough that nobody out there needs to sound the alarm and say a crash is coming, because it's just inaccurate. And if you've been watching my channel, you would know all of the data that I have provided thus far to prove that. So what is happening to the Austin real estate market? A number of things. The rising interest rates have greatly reduced a lot of borrowers' buying power, if not altogether push them out of the market for now. Also, rising interest rates have made it a way less enthusiastic play for investors who were really heating up the market, especially in Austin for the last 1 to 2 years. Property tax estimates for 2022 have been announced, and that was a ton of fun. So what that has done is stopped homeowners, investors, and buyers alike in their tracks, especially for investors whose numbers are no longer really lining up and they need to offload some properties. Pent-up new construction is finally arrived from before the pandemic, and that is great for the spring market of 2022. Woohoo! Lastly, sellers are hearing the rumors of the pivot in the market, and so that is causing them to rush their home onto the market so that they don't miss the ride. Now let's be sure to look at the other direction of what's going on in the Austin real estate market so that I am making it perfectly clear that the seller's market is here to stay. So while new construction is doing an excellent boom right now, that does not change the fact that Austin still has some very serious issues of bottlenecking future progress for new construction, which we desperately need at this time. If you are wanting more details on the Austin building permit issues, then definitely check out my previous video, the Austin Spring Real Estate Market Update, where I did a bit of a deep dive on all of those topics. Another thing that is going to keep the Austin market in a heavy seller's market situation is going to be that we are going to lose a big chunk of what's called move-up buyers. So a move-up buyer is somebody who lives in a smaller home, a starter home, if you will, and they're ready to expand a little bit and go to the bigger house because now they have all of the kids and they're ready to have more space or more yard. Those are move-up buyers. And we heavily depend on them for resale inventory to hit the market so that we can have those starter homes put back on the market. But we're not going to have as many of those for the next year or two for two very large reasons. One being these people that currently live in these starter homes that we really want to have come back to the market are sitting pretty with a 2 to 3% interest rate. And so the idea of selling that home and going back on the market to buy the move-up home at a 5.5% and climbing interest rate is really not very appealing. Another issue that's going to come up for move-up buyers to maybe hold off on that decision is the incredible massacre that just came our way with 2022 property taxes. So if you're not from here, from Texas, what happens is that you can have a homestead exemption in place on your property, which limits how much your home can raise in value. So instead of raising 50% in the assessed value, which everybody did, you only get raised 10% in your assessed value so that it keeps a cap on how much your property taxes will be due. So for somebody who's been in a home for a while and has their homestead exemption in place, protecting them from rising property taxes, to sell that home and to now move up to the next home and start that process over is really unappealing. So just know that yes, whenever you buy a home and there's a change of ownership, the assessed value of that home gets wiped clean and starts over at market value. So we're gonna pull out of talking about Austin real estate specifically, and now we're gonna zoom in on interest rates and affordability for sort of the whole nation. So affordability is based off of three things: price, interest rates, and wages. And affordability has really been holding steady for us the last few years, even while the prices were just soaring, because these incredibly low interest rates allowed for affordability to really remain within some normal standards. All right, so I've got a graph here from NAR that shows the Housing Affordability Index from 1990 on through to today. And the way that you read these graphs is that the higher the bar is, the more affordable the housing was. So obviously what really stands out here is going to be those orange bars that are from, post 2008, whenever distressed properties were really dominating the market. And we kind of hit a peak there in 2012 with an index at 195. Now here we are today, down to 135. And the reason that I wanted to share this graph with you guys is to really show that while we are certainly reaching a level that is making housing less affordable than the last 10 years, if you do continue on into the 90s and everything, you can see that we are still above that level of housing affordability. Now, is that going to continue to be the case? I have no idea, right? I'm here to provide a bright spot in sort of a high pressure time where we are all feeling inflation and affordability kind of slipping through our fingers. So we are certainly headed in the wrong direction for affordability. But if you take in a bigger picture and take in more years than just the past 10, we can maybe breathe here for just a second. So where are the interest rates going? Let's take a look at a quote that I have from Bill McBride over at the Calculated Risk blog. Based on the current estimate for the peak Fed funds rate, 3.25% to 4%, the 30-year fixed mortgage will likely peak at between 5 and 5.7%. There is some variability in the relationships. We might see rates as high as the low 6% range. This all depends on inflation and the Fed funds rate, but I don't expect rates to move much higher than the current rate, although 6% is possible. So some thoughts are that, while the interest rates are going to continue to rise, that maybe we can lean into the idea that the rate of how fast they're rising can slow down, that maybe they front-loaded the year with a lot of the interest rate rises in anticipation of what the Fed would be announcing. But just nobody knows for sure. And so actually my closing quote for you guys is really appropriate for how my observation is going. Edward Seiler from ABP Housing Economics says, nobody really knows what's going to happen over the next year. We're gonna leave it at that. So that's gonna be it for me today. Thank you so much for tuning in. If you could please hit subscribe to my channel if you haven't done so already. And please like this video if you like the stuff that I gave you. That would be really helpful. I have 2 other videos for you guys to check out right over here. One being the Austin real estate update that I did about a month or so ago, where I talked about the red tape of new construction and the issues surrounding that for Austin. And then also another really great interview that I did last week with a local lender, Alejandro Juarez, where we reviewed whether it's still a good time to buy in Austin 2022, and he gave really great advice and tips concerning how to structure a loan in this time of uncertainty. All right, guys, my name is Randy White, and I thank you so much for tuning into my channel, and I'll see you next week.
Well, I'm going down to Austin, Texas. I'm going down to save my soul. Get that barbecue at